So, hi everyone. I'm here with James Hill today, who's the CEO of Flexys. So, James, thanks very much for joining me. Appreciate it.
Pleasure. Thanks, Chris.
So, to start off, I thought it'd be good just to really chat a little bit about some of the trends maybe you've been seeing with clients. We had a conversation, and we're having a conversation earlier around cost of living as an example and trends going up. But it'd be good to hear, what are you hearing from clients?
Yeah, I think innovation, there's a couple of key buzzwords, right, that always come up. People always talk about, or recently are talking a lot about AI, a lot of stuff about open banking, a lot of things about insights. I'd still say the majority of our client conversations are probably still 70-80% traditional conversations
Mm,
around core functionality and sort of core collections processes. But I think there is still that desire around how can we use tools for greater efficiencies or to help with better customer outcomes in
mm.
an operational perspective.
Yeah. How much evolution do you think there's actually been in the market? Because we all like to talk about, as you say, AI, the latest and greatest are coming out, but the reality is sometimes that actually would love to be there, but there's actually some basic blocking and tackling that we need to go off. How would you rate the state of evolution?
It's interesting. State of evolution, appetite for innovation, and maybe really doing it. So I think
Mm,
it's an interesting, if I was scoring some of our clients and prospects on that, it's an interesting one. I guess from our perspective, we've always taken the approach that we've worked on the sort of leading edge of technology, self-service first, real time, truly cloud native, and all of the great underlying things that you can harness from that technology. The reality is that for a lot of clients and prospects, from an evolution perspective, if you've got some real-time technology, if your system of record is not real time, then you might still have some friction in the middle if you're going to do batch processing. But I think that appetite for innovation, I think it's moved at a real pace, particularly in the real time space. A lot of cores are now real time. So I think that's helping. But I do think that, as you say, it's maybe more the fear of, or the risks around change that become the
mm,
biggest barrier. So, if you've got a collection system that you've had for 15 years, changing that it feels like a very big step. And so sometimes that can be the biggest barrier. You want to innovate, you want to move forward, but maybe you tend to iterate rather than make the leap. And so we see that a lot. And like I say, there are a couple of key buzzwords that probably always come up.
mm.
Cloud always comes up. Open banking always comes up. And AI is the new one, right? Always
Yeah.
comes up. Sometimes I wonder, though, whether they're just procurement words that go into every tender, then they're not collection specific in terms of terms.
In terms of what we talk about and what sort of the common themes are that are out there in the market, like cloud or like open banking, whatever it is, how much of that is reality versus people just repeating what they're hearing as being the buzzwords versus, I suppose, the reality of what actually needs to be done, which some of it can be a little bit less sexy in terms of inventory management and looking where the accounts are going, making sure you got the right actions, the right time controls, those kind of things. Do you think we get too sidetracked to some of those things and sort of it makes it difficult to focus on some things maybe that do add more value?
Yeah, I guess the way I've always approached this is that in any kind of software industry, B2B software type relationship, there's really that sort of people, process, technology triangle. It doesn't
Mm,
change really depending on, like, it's not sector specific. I think that what is that there is obviously huge advantages that you can get from leveraging the latest technology, right?
mm,
In certain areas, you've seen how fast front end systems, you look at things like CRMs and what
mm,
Salesforce and Dynamics and how fast they've moved, and actually where they set the bar on things like analytics and
mm.
data. You then look in other places, and actually that evolution is much slower, even though they still have the ability to harness the same technology. And so I think that when you look at it, I would always take the view that if you start with the process, if you really want to innovate and move forward, you really need to think about the best process, both operationally and from a customer perspective, and
Mm,
almost forget people and technology. Because if you start with
mm,
people or technology, you immediately introduce a constraint or two constraints, which limits your ability to innovate your process.
mm,
And I'm sure you do some work in this space as well, but I would encourage someone to map out the customer engagement and the life cycle, which is absolutely not a linear process. I think if you work in financial services and you say the customer starts here and finishes here, that's not how that works.
Or like this, isn't it?
Exactly
Yeah.
right. And then it goes
Yeah.
all the way back round again. But I think if you do that and then you look at every point of friction in the process, the first bit might be the difficulty in engaging the customer. Okay, so when we think about difficulty in engaging the customer who maybe has fallen into arrears, what is that difficulty? Is it the way we're communicating with them? Is it that the channels we're offering them are too limited? Is it that our approach is very people-led and we're doing it within a certain amount of time? And then as you step through, you can start to think about things like, okay, so now let's explore the payment process. And actually, if your payment process is card only, then I would say that your answer may be open banking,
Mm.
but actually your problem is not that you don't have open banking, it's that your payment options are too limited. So then you need to explore the right solution for you and your customers.
Mm.
And I think if you can work that and then understand how technology can really help your process. I mean, I would love to see an RFP that said, we have designed a future operating model that looks like this.
Mm.
There are no technology questions in here apart from tell us how you would enable this process. I think it would be fascinating to see how suppliers would respond.
Yeah, and I suppose how do you mentioned real time earlier, and we were chatting a little bit before about, I suppose, there's a balance there between, so I suppose you got legacy batch processes, but let's say it's daily processes versus super real time, in terms of like where you deploy that. And I imagine there's some areas where that's super critical, your real time, for example, like trigger type stuff, like you want to respond back straight away, versus some things just seem to have like much more of a natural kind of time frame, such as billing cycles tend to be on a monthly basis because that's the way customers are. How is it best to determine where you need real time versus where maybe you don't, or it's a later kind of innovation to put in?
Yeah, so I think for me, what it all hinges on is really it's about the relationship between your systems. And so, from my perspective, a well integrated core system of record and other systems, one of which will be collections, if those things can talk in real time, I think that actually that's where the benefit comes from the customer. Because obviously, what you want is at any point where the customer engages via
Mm.
self-service, you want the ability for the collection system to understand the latest picture relating to the customer, which most likely will come from their system of record. You want to understand then what other information is available to you, and actually we can do that by consuming those events from system of record or CRM or wherever they're coming from. And the way I would look at it is, if you've got a customer who's engaged and it's 1 a.m. On early hours of Monday morning, you want to try and leave the customer with an outcome of some kind, which isn't call us at 9 a.m. And so in that scenario, real time is great. In others, as you say, there are times when I was talking to a payments provider about this the other day, in terms of when they settle and when businesses reconcile. They don't want to settle in real time because businesses don't reconcile in real time, right? The larger the amount they're settling, often businesses want a different timescale. So I think it's more around actually how fast clients can adopt something. And I think that comes down to, from our perspective, it's all about ease of integration. Integrating, obviously, in an event scenario is much better, but equally, you still need those scenarios where you can integrate with other systems in different ways. So I think that's probably the important thing when it comes to real time.
Just expanding a little bit of that around data as well. And you mentioned the importance of data. It feels like that's completely changing. And that seems like that's the theme that keeps on coming through in all of these conversations, which is using data to evidence consumer duty, to make more decisions, et cetera, et cetera. How do we start to think about almost like the explosion of data that this is going to create, right? Like, where do you look at individual triggers? Where do you look at individual criteria to then say, now you need to take this particular event has happened, you need to take this particular action, because it's almost like it's exploding exponentially and you can get lost in it.
Yeah, 100%. I think it's been a real I think data strategies have changed enormously, and let's be honest with you, they have changed enormously in part because of the
Mm,
power of cloud processing and actually the fact that data isn't as expensive as it was
mm,
previously. But at a business level, I think data owners have changed.
mm,
If you think back, a lot of data projects and insights projects were all IT led. Right. And
mm,
fundamentally, that's the wrong place to do a data project because the people who really want to use it and get hands on are the business owners. And so data has to be accessible to be useful. I think what's really interesting is that when you look at things like predictive analytics and modeling and how fast that's moving, The reality is that those models have to learn from somewhere. And so you do need huge quantities of data. And actually, that's where cloud native and processing and cloud power, that really comes to the fore then, right? Because whether you're using Google Looker or the power of AWS or whatever it might be, but you have to be able to put that data into a format that allows people to really use it and actually build a strategy from your data, but also accept that's going to evolve because there are so many different scenarios, so many different edge cases. And I guess what you really want to understand is, with an interest rate increase, what is that going to do? There's some very straightforward modeling, right? Interest rates increase, what does that do to our customers? But there are also lots of other things that you need to consider. And predictive analytics is amazing in terms of what you can do and how far you can go. I think that it's really important when you look at those tools, though, that one of our partners is really big on this, but the human in the loop aspect is absolutely critical, because there is bias in those tools as well. It can learn bias, it can build that into some of those models. And I've always looked at it from the perspective that actually some of that predictive analytics information for us is really useful from a configuration perspective rather than a direct customer perspective. So if you think about right time to contact, what's really interesting with that is that for people, maybe you've got young kids out there. I can remember when my son was small, I was always up at probably 5 o'clock, right? But please don't contact me between 5 and 7, right? Because I'm going to be doing an awful lot of stuff, right? And equally, don't contact me after 9 o'clock at night, because I'm most likely going to be in bed. And there's a lot of things around when is a good time to contact someone in that particular scenario. And it's not just about a broad range of age group and job type and things like that. And you really can build some interesting things that if you're setting up a contact strategy, I really love the idea of analytical models telling you that the time you are proposing to send these comms is not the most optimal time based on the information it knows about the customers. I think that's where you can get some real steps in some of that analytics and data.
Yeah. I was thinking, as you were chatting there, I was thinking about Spotify as an example, or the large music services. I mean, the fact that we've gone from having a limited set of music to having almost like you consume any music you want. But the challenge is now, how do you find that? So how do you curate that? And I wonder if that's the similar kind of challenge you're going to have with data, which is we've gone to digital systems. You can almost go like, you can measure anything, but it's like, where do you look and how do you come up with the questions to ask? So if you think about music, if you ask the right question, you can probably find the song. But asking the right question is not necessarily easy if you want to find a song that has a certain thing and it maybe evokes a certain feeling. I mean, you need a little bit of curation there. So do you think firms need to maybe realize that it is about the data, but it's also around the expertise around asking the right questions or having the data scientists to be able to find the nuggets within that data as well?
Yeah, 100%. And I think, again, I would say you've got to couple that with the sort of business logic, because ultimately the people who work in your collections team or your customer service team, they know the customers and the type of customers and situations inside out. They have that learned experience, which is very hard from a pure data perspective. The interesting thing I would say is that, like you say, you now live in a world of unlimited choice and unlimited options. You take your Spotify example. I would say that actually, as a result, my recommendations, whether it be Spotify or Netflix, are probably more generic than my actual taste. But if you had to go and buy something, you would go and buy the thing that is very specific to you. Because it's an unlimited tap of resource, you will go through a whole variety of things, which then in turn almost starts to teach the model that you like a very wide variety of things. So it's going to suggest a wide variety of things, let alone the fact that then you might share that with 3 other people in your household, right? So it really doesn't know much about me at all. And I think that's where it comes down to asking the right questions, maybe validating what it thinks and how it can learn that information. I think that this type of customer would respond well to X. I mean, there's a very simple, if you take the good communication methods. I mean, you can make a very arbitrary judgment that if you're communicating with someone under the age of 40, WhatsApp may well be the best route. I mean, it's a very blunt force measure. If you're communicating with people in the US, actually text message might be better because it's just types of things in communication preferences. But actually, that's so broad brush that I don't need analytics to tell me that, because you can almost just assume these things. And I would say that it's still it still moves away from the concept of customer choice. And I think that's the interesting thing for me, is that I still find that at the heart of it, you end up still compartmentalizing choice and preferences into boxes. Whereas actually, the way I interact with different banking apps is completely different depending on the type of bank it is and what they offer me in the experience. So I do think there's something in that around, you do need to ask the right questions and you do need to think about your process, but also probably the fact that your customer will respond differently based on what you have available to them.
Yeah, I suppose you got the feedback loop, the fact that you're almost like you're embedding your own bias within the models because you're influencing the outcome, isn't it? So it becomes like self-perpetuating. But also there, I suppose you've also got around segmentation. We all would do segmentation, broad segmentation around like WhatsApp versus not. And there's always a degree of error in it. I suppose we're trying to narrow that down so the segments are smaller, but then the likelihood of getting that really wrong is even greater, because even within that under 40, there'll be some people who don't like using WhatsApp, and there'll be lots of people over 40 who love using WhatsApp, right? So it's so broad brush, but okay, you narrow the segments down, but then you're saying, look, this person here can only use WhatsApp. They're definitely going to be in that segment, but actually that might be just completely wrong because you might put all your process on that as well. So it feels like there's a bit of a balance there in terms of what's the right segment size. Can we really personalize down to almost like an individual level or not thing? Or will that create more errors or more problems?
Yeah, I think you have to test, learn, and validate, right? There will never be a one size fits all answer. There will be answers that are more suitable to a larger group. But I think that when you get down to a real individual customer level, until you know that person, it's very difficult to understand. And I always think that example of when you think about collections just as a process, the initial contact is the most important thing. Landing that communication well and accurately and getting a response and an engagement. And when you think about, actually, it's the hardest communication, because to get someone to read something and decide they're going to, if it's only by phone, pick the phone up and talk to a complete stranger about their financial situation at the most difficult time, it's such an incredibly low probability that is going to be an outcome that you're going to get. And I think we talk a lot about the fact that self-service is such a great route for that. I mean, it's interesting. I would say that probably still do a little bit. A few years ago, we would have talked a lot about digital self-service. It makes me smile a little bit when I read it, even on our internal things, that digital is the word. People under the age of 30, right? Digital is not a thing because there is no analog.
Yeah, right? Like, everything's digital. We're just all digital.
Yeah, it's not a concept, right? So I do think there's a really interesting timeline of technology by when people were born and what their first experience of technology was. And you could probably talk about mini disc players. I was talking to my son about
I can talk about video. AM radio.
I spoke to my son about Blockbuster Video. It just blew his mind that there could be a concept of manually selecting, like a manual Netflix. I'm like, that's what Netflix was, right? So I think it's interesting around the fact that when you talk about, we've got this new innovation that's self-service. I mean, I don't think that's an innovation at all. If my bank came to me and said that, I'd be like, that's what my expectation is. I'm expecting that you offer me the ability to engage via channels that I want. Asynchronous communication. I think of whether I've engaged with airlines or banks or whoever it might be, but actually asynchronous comms in terms of chat has been much more effective than me hanging on and waiting. And the problem is that consumer experience is moving at such a fast rate. So my desire as a consumer and how I want to engage is actually influenced by other tech, how people engage with it. You use the Spotify and Netflix example. That actually changes how I perceive how other things should offer. Think of like banking apps, and I've got probably 5 or 6 on my phone, and I could very easily put them in order of what I like and what I dislike. But when you think about them, they all offer very different experiences. And I have a bit of a North Star on what I like in there, but then I still use the other ones. The mortgage one is probably the worst experience, but I don't need to interact with it very often. So if they came to me and offered me loads of self-service and loads of live chat and loads of on-demand features, I think I'm probably only going to look at this every few years. Whereas my current account, I want all of those features all the time. And it's different by product, completely different experience.
So going back to AI, you talked about AI and you talked about cloud in particular. What's your sort of vision around where do you think that's taking us? I think certainly ChatGPT felt like it took us by surprise to a little bit for those who weren't in the know or weren't close to the maths around the techniques that were coming out. Where do you think that's going to take us? What's your sort of your view around how that's going to be adopted or adopted within particularly within the collections industry?
So I think a lot of it's going to be around optimizing processes and efficiency. And I
Mm,
think that actually when you look at the heart of our sort of cloud, self-service, digitize and automate proposition, it's about efficiency. If you had to
mm,
distill it down into a few words, it's about collecting more faster, right?
mm,
Basically, that's what it is. So when you look at these tools that exist, how's ChatGPT or how's a LLM going to impact a collections operation? The way we use it is that we just used it in our configuration tool. So when someone wants to create a letter and they're trying out some new comms, that if you want to call, an LLM model to build that for you, then it can build the letter. But actually what we really use it for that's really useful is it builds the code on the fly. So you can
mm.
really do low code, no code. I think that when you think of things like voice analytics, and to be honest with you, some of the examples I've seen in that space are just too noddy. Some of the vulnerability scanning tools, some of the ones are almost have a lot of that bias built in around because someone's described a situation, it's automatically gone, you are vulnerable. But it may not be the case at all. But actually, I was talking to someone this week who was saying that they have almost a very low bar for vulnerability. So they are assuming many more of their customers are vulnerable than are not, right? And they treat them in a different way. So arguably, from a customer perspective, they might actually get better treatment and different treatment in that route. But I think that I would say you've really got to look at how those tools can help you. I think that some of the AI tools, particularly when you look at, we're talking about data, but predictive analytics, the way that you can take very large sets of information and very quickly distill them down, and you can very quickly get some tangible suggestions. I'm always slightly nervous about the direct customer AI part, just in terms of I can see areas where that's useful, but actually there are aspects of that AI which aren't much more dissimilar to predictive text on an email.
It seems that we talk about this general term of AI, but actually it's lots of different things underneath that. And one of which is machine learning, which you've already, which we do know about, and we've talked about for a while. And then but we're talking about different terms, and so there's a looseness in our language around what we're actually describing, and it's quite hard to move away from it. But I suppose it helps from an awareness point of view in terms of capability.
Yeah, I would say that when you look at things like RFPs, we will be asked the question of, is it cloud, right?
Mm,
No one says, is it cloud native? They just say, is it cloud, right? Now, everything in the world is cloud, right? In one way,
mm,
shape, or form. I can have the most legacy technology that I can make cloud by just
mm,
sticking it in AWS somewhere. What is your approach to AI? Do you have AI tools? Do you have open banking? What's your approach? And those questions are so broad and so generic. Actually,
mm.
when you think about open banking as an example, are you talking about PISP? Are you talking about AISP? Do you even know the difference? Actually, I can guarantee that in your origination cycle, you're already using open banking because you're most likely using the account information side of that. In collections, I think that using the payment side is pushing on an open door because ultimately it's all about
It
more
seems it.
choice. It's just
Yeah.
more choice for the customer. The account information side is really interesting. We'll probably touch on it a little bit, but I think that has the potential to really change and the income and expenditure and the sort of budget planning process. That's something we're definitely seeing.
The AIS piece, it was almost like it did feel like we were almost like it was almost like incorrectly labeled to a certain extent. We're all looking at this is going to solve affordability, or this is going to solve even the term open banking, which is it gives misinterpretation. And it's almost like, but it hasn't really met the promises or the expectations in terms of being one button and it fixes the I&E process. However, it does feel like there's a wealth of information there. So it seems like there's almost like it comes back to that data point. There's lots of data there. The way you ask questions to the data can give you some really interesting answers that can be informative around your collection strategy. But it's a few steps in, and it requires a bit of brain power to get to it.
I think it's really interesting. I think income and expenditure and affordability is really interesting when you listen to the FCA talk about consumer duty and you look at things like the SFS and things like
Mm,
that. And then when we talk to our clients and actual operational teams, and I'm sure you'll have the same discussions, often there's a little bit of people will do an income and expenditure manually. They most likely will enter the information that probably they want to get a certain outcome, right? And there are some things
Mm,
where you can go through that and it says, well, how much would you like to pay? Like, what's
mm,
your desired amount? Because a lot of people will say that their customers are going into it with that already in mind. If you're going to engage, no one's filling in an income and expenditure if they've got no desire to pay anything, I
mm,
think is probably the starting point. I think that part of the challenge is that income and expenditure, affordability, the whole construct of those forms is almost completely alien to people who don't work in this sector.
mm,
Some of the questions and even some of the categorization, people don't look at their money like that. And some of the things are incredibly difficult to work out in
mm,
terms of what you're spending on X, what you're spending on Y. And so what we tend to see happen, I think, if you take it in a real world example of why I think it's useful for us, is that if you are self-service first as a product, your customer engagement is often, it can be at any point in time. So if it's out of hours, let's say, and the customer engages, which is fantastic because it's what you want, they come to some kind of affordability assessment. They manually enter their income and expenditure data, which takes a while for them to do. They get to the end, and let's say they've made a genuine error on some of the parts. Most likely, our product is going to immediately go, well, against the SFS, the tolerances, and this, that, and the other, you're falling outside of this. It doesn't look right from a data perspective. So, most likely, our clients will say, then the outcome is we need to follow up with a call with the customer, right?
mm,
We're going to have to verify the information. At that point, you've got an engaged customer, and the outcome is we've introduced some friction. We're going to have to call you, or you're going to have to call us, and that's problematic, right? Because now you've got, is that phone call ever going to happen? Is someone going to answer? Whatever.
mm,
The way we're looking at it, and we partnered with MoneyHub in this space, is that as part of the digital journey with the customer, you could offer them the ability to do an income and expenditure, or you could do an open banking call from an account information perspective. If the customer chose to do a manual income and expenditure, what you could do at the end, if the data didn't look right against the SFS, you could then say, hang on a minute, we could verify this with an open banking call. So
mm,
you could almost present, it's like a second chance on the
mm,
verification, because it might be that it's actually right. And whilst it might look incorrect against some of the SFS guidelines, actually, when you look at their account, it is actually right what the customer's
mm,
saying. Verify with open banking, suddenly you've got a much richer picture of the customer. And actually, if that can help you give the customer an outcome in real time and offer them forbearance at that point in time, you've really helped the customer, because you've left them at a point where they came into the engagement in a difficult situation. They've come out of it with an outcome. It might be a short-term payment plan, a long-term payment plan, a payment holiday, whatever it might be. But fundamentally, that customer probably feels a lot less stressed about their situation now, and that you've
mm,
offered them something. And then the really great thing is that you can use the open banking information then from that point to actually look at how their financial position changes. So
mm,
actually, is it still affordable in month 2? Is it still affordable in month 3, that arrangement that you set up? And I do think that a lot of the legacy processes are very one time only. Credit reference data is often out of date. Affordability assessments at origination are a one time hit. And a lot of the time, those financial services organizations don't know a lot about their customer situation until something happens and it gets worse.
yeah. I mean, one of the things that's quite interesting, actually, I think with the chat GTP type examples that come across, is we think very much in terms of like processes and linear processes. So take the INE as an example. It's very logical. You sort of can't argue against them. It's a very logical kind of process. But even just the way you explain the difference between it doesn't meet the tolerance, so therefore I'm going to talk to someone. Do you think if we were sitting down going through an INE, you'd say to me, this doesn't look right. It doesn't look right at all. And it's just a different way of doing it. Maybe it gets to the same outcome, but it's a different way of engaging with the customer. And I just wonder if our almost like technical processes and the technologies are going to catch up in terms of the way we interact with people to try and get the outcome, but in a much more sort of human kind of way, rather than this sort of logical sort of computer says yes or no kind of way.
Yeah, I think you have to be careful that you don't lead the customer
Yeah,
to an outcome or an answer that is the answer you think they should give to the
yeah.
question.
Maybe that's what your friends in the pub or the supermarket or the coffee shop actually do. That's why you like it, because they lead you. I don't
Yeah,
know.
you can't be spending that much, surely. And then you
Yeah,
go, oh, maybe I'm not. I guess there's always a really simple example. Like, so TV license is a great one. If you ask someone how much their TV license is, I absolutely would give you my monthly figure. right?
Yeah.
I would, I don't know, it's about 30 quid, isn't it, or something?
Yeah.
And if I got asked that in an income and expenditure, I most likely would give the same answer.
Yeah.
Now, the reality is I'm going to fail on that because it's going to go, your TV license per annum is definitely not £30.
Yeah.
And there are things in some very simple tolerances where you go, actually, if you ask someone how much their food shopping bill is per month and they say it's £50 or less, it's most likely not the right answer. Maybe they mean £50 per week or whatever it might be. And credit cards have done this pretty well, where they ask for things like salary and expenditure, and you put an amount and it says, oh, is this actually the monthly figure, or we're looking for the monthly figure or the annual figure here. So I think there's sort of some nudge suggestions around that side you can do. But I mean, ultimately, you want to build strategies that engage your customers and take them to the point where if they're struggling financially, you can offer them an affordable solution that helps them. And I think by design, you have to really look at your process and actually even some of the ways you ask the questions. Some of the questions are enormously complicated. You think about some of the financial statement information. And if I was to ring in and ask a car insurer and speak to an agent who's someone in their first job, maybe, let's say, on a customer service thing, and I was asking to explain how the APR calculations worked on my car insurance policy, it's a really difficult financial maths question. And so there's not just about helping your customers, you've got to think about helping your own team, helping your agents. They could be equally exposed to some of these things. And so there's education all the way through it. And I do think sometimes the art is in simplifying the very complicated financial services regulatory questions that you're asking, which to people in the industry all make a lot of sense, but to the end consumer may make absolutely zero sense.
You do wonder, with all this advances in technology, and typically up to now it's always been around, let's find additional segments, let's make things more complicated, but actually wonder if although things might be more complicated underneath the hood or underneath the bonnet, actually things are going to appear much more simple. I mean, much simpler. It's around simplifying the experience to a large extent, or simplifying the understanding, which will actually make it easier from a human point of view. And so it's almost like we've almost gone full circle on the technical implementation.
I think so. There is, and undoubtedly, I think we see it that when we're working through things like forbearance logic and some of the decisioning logic with some of our clients when they're implementing their solution, there's huge amounts of complexity and there's process maps and this, that, and the other. But you've got to take the duck on the water approach, right? That from a customer perspective, it's got to look like the simplest thing in the world. It has to be engaging fundamentally. In some ways, it has to be welcoming. But I think we talked before actually about debt letters when we talked to one of our partners at Plain Numbers about this. The fact that you can spot a debt letter a mile away, and actually you think, what's the goal of that? If I've got 5 letters on my kitchen side and one of them is a demand for money, what's the one that you're going to hide, bin, tear up? It's going to be that one because anybody else would see that, and there's that stigma around it. And I do think that from a customer perspective, a customer is in a situation which is really difficult, very stressful. They may not be able to see a way out of the situation they're in. And from a creditor perspective, there's lots of signposting and everything else that you can offer. But as soon as that customer enters that process, they are on a time-bound engagement with you, and they will have their own logic about debt sale and all those other things that they do. And so you have to be able to present the customer with something that fundamentally is very easy to understand, but also offers them options. We talked to someone the other day and said there's absolutely no point offering self-service to your customers if you don't offer any forbearance options. Because what do they get at the end of the journey? Nothing. You've got to be able to offer them something that ultimately takes the strain off your teams, helps your customers, puts that customer back, gets the account back into order. So yeah, I agree. I think simplicity by design, if you look at any other technology, that's always the sort of North Star.
And the idea you're just talking about there is almost like removing barriers to action as well. So if you get a letter, it usually sits on the kitchen counter and then something else comes in and sits on top of it. And then you might have been wanting to deal with it straight away because I can't quite handle that. So I'm going to deal with it tomorrow. And then it falls down the pile like your email. And then you've forgotten about it until you get the next reminder. And it's almost like, how do you remove the barriers to action to make it easy or as pleasant as possible so that people can actually deal with the situation there and then, or as soon as possible, they don't forget about it.
Yeah, and I think the key then is that you need that sort of multi-channel, always-on approach, because if you get a letter or a text message or whatever it might be at let's say you get it at 4:30 and you work in a supermarket and you work from 10 a.m. to 6 p.m. You're probably not going to see it because you're probably not going to have your phone on you. So you might see it at 6:01 when you finish and go and look at your phone, by which point the person who sent it to you is most likely closed, right? So I can't call them. And then you might think, I will call them tomorrow. And then you look at when they're open and you go, oh, they don't open till 9:30 or 8, or I'm going to be at work, so I can't.
Yeah.
And actually, you look at that and you go, I know not many people have a phone only strategy, but I think if you do, you're making it incredibly difficult for the customer to engage. If you can deal with something there and then, congestion charge fines, Dartford crossing fines, all of these various things that come through, and it's, you could pay this now, it's £2.50, but if you wait a week, it's like £50. If I don't action any of those things immediately, it will inevitably be £50. So you've got to be able to offer your customer the route to engage actually in the what's the easiest route for them. Because it's really difficult, and I think you're right, barriers to entry and at that level, you've got to look at all of the possible bits of process friction at the front end and how you can mitigate them or reduce them.
Yeah. So we talked about quite a lot of new ideas that are coming up, and it's quite interesting to see how some of these things come from different industries. Where do you think we should be looking in the collection space for the next thing that's coming along? So is it new contact channels, or what should we be looking at? Or even are there other industries you should be looking at, for example, like the sales and marketing industry or those sorts of things, to say, look, these are technologies that we're not using today, but we should probably think about them because this is the way the world is going, or this is the way demographics are going. Any thoughts on that? Or?
So I think often if you look at the front end of direct consumer engagement. If you look at B2C businesses where they are selling a product directly to a consumer, it's interesting because those businesses have to adopt and adapt and change and innovate at a really fast rate, because otherwise you just suddenly lose market share overnight. I think that when you look at some of the sort of sales and marketing, some of the CRM tools that are out there, some of the core banking products and how quickly they've evolved, I genuinely in the last 18 months, the sort of explosion in core banking and the technology that underpins that, and even just the differences in approach. So by tier of bank, completely different approaches to the type of product that you have and implementation. Obviously, I think you're seeing more and more around technology that can integrate in real time, because I think ultimately it's the fastest way to deliver outcomes and projects. I think that from a customer perspective, customer experience, you are moving probably not as fast as it's 2024. Probably think you should be a little bit quicker than this, but I can't see much beyond the fact that in the next 5 or 6 years, surely my view of my banks and all of my banking apps and everything else will really get to that sort of single pane of glass from a customer perspective. I should really only have to use one app or no apps to be able to see my mortgage, my pensions, my different current accounts, my credit cards, whatever it might be. I should be able to see every single one of my financial products from every single provider available in a single place, and actually probably in a way that I want to see it. Because I think in collections, it's really interesting. Take the example that someone sets up a repayment plan and you store their card details and the payment fails, right? On the third installment. The payment fails, you engage the customer and say, oh, the payment hasn't gone through. And the customer looks at bank A, their bank A, and goes, well, I've got enough money for that. And then realizes they gave you a card to a different account. But actually, from the customer perspective, they have enough money to make that payment. It's just not on the single physical thing that you hold and that you are expecting the payment to come from. And so I think that there's lots of intel you can gather around why a payment failed and the sort of the funds available to a customer and where they might be. But at the moment, we're still so segmented and regimented by how individual banks and individual financial institutions work, and it really doesn't benefit the consumer at all. I know I can add bank account X to my other bank view. I think that's a space that will move a lot faster. There are some people out there where you can view all of your accounts, you can move money between them, you can take a payment and you can split it into a pay in 3. It's got integrated buy now, pay later, integrated loans, whatever it might be. I think those are really interesting because they are they're very much financial services experiences built from the consumer's perspective. And yeah, I think longer term, there's a lot of technology that enables that, and it's not the easiest, right? There's lots of technology underneath that, underpinning it. But I do think that a much more consumer-led experience is probably what we're looking for.
So it's almost like, although I mean, I think particularly cloud, Azure, and some of these sort of new technologies that come along have exploded the amount of availability, the amount of choice we've got. And you're saying it's almost like bundling up the unbundled stuff that we've seen to a certain extent, so it comes back together, so it's one experience, and trying to join up those experiences as much as possible, rather than this sort of like super expansion that we seem to have had the last sort of 5-10 years.
Yeah, I think so. If you think of payments as a really interesting space, because the businesses who work on open banking payments, as an example, have very rapidly evolved their offerings in terms of what they do, the methods available, the information they can provide. That's moved at a real pace. I can't look much beyond the very traditional banks, who probably still tell me that sharing my bank information with anybody is not a good idea, right? And actually, that's not a technology problem, that's an education challenge, right? Because for a long time, there's been this thing of never share your bank information, never share this, never share that. If someone asks you for this, don't do it. And then actually you go, personally, I would use pay by bank as an option. I would probably go pay by bank, Apple Pay or Google Pay, and then pay by card last if I absolutely had to, because I would see pay by bank. I feel like it's a much more secure experience, but equally, my parents might be absolutely terrified if they went to pay for something and suddenly their bank app popped open. And that's very much around education. And I think that does it feel safer to store 4 or 5 cards with credit card company X? I don't know. I mean, every day you really read about challenges, and there was one this week about data breaches and things like that, and maybe I don't want my card information stored there.
But then they also expire, and then you have to re-enter all the details again, which is the real
and then they show me all of my expired cards that they're still storing on there, just with expired against them. I think
we're on the same apps.
I think that there's some simplicity in that. What it really relies on ultimately is interoperability and partnerships. I think that a lot of people talk about fintech ecosystems, right? And a lot of banks have tried to effectively buy in a fintech ecosystem. Realistically, you've got to have technology providers who decide themselves that it makes sense to partner with other technology providers and build solutions together. Because if it's led by a client, what you end up with is a client specific, you end up with just integration, right? Whereas when we go out and say, we think we should partner with X, and we go and have a conversation with them, we're having a conversation and we start to build an integration, and we build a relationship between the businesses that is not led by a client or a prospect. So you almost take a much purer view of what is good. And then when you show it to people, they go, wow, that's amazing. The way that you integrated with that core, and the way that you can understand if we can do this, and you can offer them an increased overdraft here rather than there. And you go, yeah, because we're just sharing data and we're sharing information. And really it comes down to that, because if you're working with a partner, or you've got 2 technology providers in the same space, and customer says, why don't you integrate together? Sometimes you might go, yeah, but are they a competitor? Do we want to integrate with them? Maybe we'll do a poor integration just because we might think they're a competitor. And actually, the customer loses out at the end of it because the integration isn't very good. And the client goes, well, it's not very good, is it? So I think that sort of innovation has to be led by fintechs themselves, deciding that it's a good thing. And obviously, there's data that is shared. You've got to have absolute security from that perspective. And obviously, there are things in the cloud that give us security by design, scalability by design. They were problems that people were solving previously individually on a case-by-case basis. Now, all of the cloud providers, and actually all of our customers, probably now adopt multi-cloud strategies anyway. From that perspective.
It's interesting, as new technologies come in, then they tend to, and technologies build on each other, don't they? And you build up these ecosystems. So like the ecosystem, I was thinking there around ecosystem between the motor vehicle and gas stations, for an example, right? That's an ecosystem in itself, and that's quite a stable one. And you're just making me think maybe that's what we're going through in terms of starting to build that from a software, more from a data exchange point of view as much as anything, which is starting to be much more interreliant on each other as we expand from here on out. So this is another change that's coming along that we're going to see.
Yeah, and I think ultimately, innovation at some point comes from a need to innovate. So, for example, if electric car A had a range of 1,000 miles when they launched it, they wouldn't spend the time developing the software when you put the postcodes in to map out where you needed to stop to recharge on your route, because fundamentally the battery would have addressed the problem, right? That you've got a shortcoming or you've got a need or a challenge. So therefore, to sell it to somebody, you've got to address the problem and resolve it by design, so that people go, isn't it amazing that my electric car tells me where to stop to charge and how long for to complete my journey? It's funny that then you feel that's a benefit, whereas actually, if you stood away from that and looked at it, you'd go, well, just get a better range, right?
Yeah.
That's not the problem, right?
Yeah.
You built a workaround, which is fine. And so in some ways, in some scenarios, you create the challenge and then you have to solve it with your own innovation.
The constraints drive the innovation, don't they? Even if you just look at coding as an example, when we used to be much more constrained on memory, you could argue that maybe some of the coding was more efficient back then because it had to be. When you had 1K on your ZX Spectrum or whatever it was, or your Unix system, whereas now you can do a lot more things, but you don't have to be quite so constrained. So, is it as efficient? You could argue maybe not. Does it need to be as efficient? You could say maybe it doesn't as well. But
it's an interesting example. It's an interesting example because actually where it does, and actually from a client perspective, it never really manifests itself. But actually from a technology provider, vendor perspective, it does. So you're right. You can get away with writing quite inefficient queries now. But the reality is that if you measure your margin and your unit economics as a business, what happens is that you look at it and you go, wow, our cloud bill is enormous. And then you look at each of your clients and you go, why is this one so expensive? And then you look at it and go, oh, it's these underlying. So then you go, now we need to become more efficient and we need to optimize, right? So there are industries out there who make a huge amount of money about optimizing cloud. I think if you've ever implemented CRM, any of the sort of famous CRMs at scale, often you'll have a delivery partner who implements it for you. When you finish the implementation, you probably have someone who comes in and tells you how you can optimize the implementation that you've just done. So look, there is a little bit of industry for industry's sake in that, but I do think that you have to always look at where you can innovate. And actually, as a company, I would say that often we will look at, from a product team perspective, they will look at how the sector's changing and they'll talk to our clients and they'll say, what do you like? What do you dislike? Where do you think your biggest challenge is going to be this year? From a development perspective, we'll be looking much more at sort of fundamental technical things. What new languages are available? Can we be more efficient by doing this? What can we do at a cloud level? And ultimately, you then look at those cloud providers, and we put a big partner with GCP, and the rate at which they're moving is enormous. So when they talk about AI and how they're using that, and that we can select which cloud zones we want to use for the AI tools that are built into their offering, you've really got to leverage your partners, because otherwise you stand still for too long and suddenly technology is not a USP, right? Because your competitors can just jump that
leapfrog
overnight. Yeah.
Well, James, I really appreciate making the time. Some really interesting topics there we're starting to dive into, but I appreciate you making the time, and it's fascinating as ever. Thanks very much.
No problem. Yeah, it's great talking to you, Chris.
Thanks.